Hey guys, what's up out there? It's the White here with Retro Crypto. Got my big boy glasses on today. Got we're gonna dive into what's going on with the market. Hopefully, calm some of you guys down, but it doesn't stop the reality from kicking your butt, if you know what I mean. I mean, it is what it is. But before we get started, I am just an ordinary guy out there on the internet who loves cryptocurrency. I am not a financial advisor. It's essential that you do your own research before making any and all financial decisions. Now, with that said, hey guys, I'm at 672 subscribers. Man, it'd be awesome to hit 700. Please just hit that subscription button. All you gotta do is just boop, hit that button. Helps me out so much. And while you're at it, hit that like button too. Let's grow, guys. Let's get this channel moving. If you can't subscribe, I understand. Still, at bare minimum, hit that like button. It helps so much. All you got to do is hit like. But anyway, let's get moving. As you can see, there's a sea of red out there. It looks horrible. Everything, almost everything, is down. There's a few guys that are up, but for the most part, everything is down, including my babies sitting here in the middle, Ada and Hex. Now I want to and Mana up here, but I want to talk to you guys about what's going on. Now, usually I go right into the analysis, the technical analysis portion, but today I feel it would do you guys more justice to understand what's going on behind the scenes because life is very straightforward. Action, reaction. Okay, so you learn this in about between two terrible twos, when you're 3 years old. Well, it's the same for us here. The government is making moves, and the market is responding. Now we got moves in the U.S. government, moves in Russia, moves in Ukraine, and honestly moves in NATO, and it's affecting everything right now, guys. So let's dive into this and let's see why everybody's panicking. And I guarantee you something. It's just not cryptocurrency where people are panicking right now. It's stock market. It's stock markets. I'm sure everything's down today. I have no doubt in my mind. But let's go ahead and dive into this. I found a really good article about this, and there it is. Okay, this was on CNBC, and it's a recent updated article, and I really like this one. So let's read this. I got my glasses on, but we're going to talk about this, and then we'll get into the technical analysis. The Federal Reserve's rate debate and Ukraine tensions could jolt markets in the week ahead. All right. This is part that affects us. St. Louis Fed President James Bullard appears on CNBC's Squawk Box Monday morning. His comments will be noteworthy after he surprised markets Thursday with a call for Fed funds rate to be 100 basis points or 1 percentage point higher by July. All right, so let's jump down here. So basically, they're going to be raising interest rates. So everybody's already nervous about that. All right. Stocks are likely to be volatile in the week ahead as investors watch tensions between Russia and Ukraine and the debate how quickly the Federal Reserve can raise interest rates. So basically, the markets have inflation's off the hook. I don't know about the rest of the world, which I'm pretty sure it's off the hook everywhere. It has to be. I went grocery shopping today, and I was like, "Hey," I said to my wife, "Why don't you make beef stew anymore? Let's get some beef stew." She's like, "Look at the price." I was like, "Oh, it's $22." She says, and I was like, "Yeah, I guess it used to be like 12 for that, wasn't it?" And she was like, "Yeah," and I was like, "All right." So inflation is off the hook, guys. It's absolutely off the hook. So they're going to have to increase the rates because there's too much free money out there. And I've noticed I'm not hearing that chatter about hiring like crazy right now, which means that deflation is probably already starting to kick in because companies are going to have to make moves. They're going to try to be ahead because everybody knows the market. It's going to be a significant downturn when the rates go up. All right. Markets were rolled in the past week, and bond yields spiked after a hot inflation reading Thursday upended many Wall Street forecasts for interest rate hikes. Investors were dealt another blow Friday after the White House warned that Russia could invade Ukraine during the Olympics. Both the U.S. and the U.K. have called for their citizens to leave Ukraine as soon as possible. So basically, we guys, these meetings that when you hear about Biden meeting with Putin, it's real straightforward. I think Russia is going to move forward with this invasion. Now, how far they go with it is leaves up to question. Like I know when they went into Crimea, they just took like one little portion, but I don't know. This time they may actually take Ukraine and under their wing and start rebuilding the Soviet Union because you got to remember Soviet Union bloc crumbled in the late 80s, and then it was just Russia. But it really feels like that Putin wants to regain the good old days. Um, so that's where that is. And it's not some little rinky dink army that you can just say, push them around. You can't do that. It's the same as the U.S. Army, actually. It's the same. You get where I'm going at with this. But all right. And NATO, and you got to remember the rules of NATO. NATO has specific rules. If you attack one, you attack all. So this whole thing is all over because Ukraine tried to join NATO. NATO didn't let them join because of this, but they supported them. And it seems like it'd been better off not supporting them now because it seems like the situation's worse. But all right, let's keep reading. The major averages. I think the Fed keeping every. Oh, sorry, guys. I think the Fed is keeping everyone on edge. And this group is going to add their edginess," said Peter Brokerich, Chief Investment Officer of Bleakley Advisory Group. So we had a 3-week earnings respite from the macro. We returned macro, and this week we were reminded earnings season is pretty much over and all macro issues matter again. The major averages slipped sharply on Friday afternoon, and Treasury yields came off the high they set after Thursday's report that January's consumer price index jumped by 7.5%, a 40-year high. The S&P 500 lost 1.8% for the week, falling to 4,418. With about 2 hours left to Friday's trading, U.S. National Security Advisor Jake Sullivan told a White House briefing that there were signs of Russian escalation at the Ukraine border. Sullivan said it was possible an invasion could occur during the Olympics, despite speculation to the contrary. Up until now, I'd say it was all about monetary policy. This throws an extra unknown into the works, said Mark Chandler, chief market strategist at I can't read it. Bannockburn Burn Global Forex. The dollar is rallying, oil prices have rallied, and stocks are selling off. Even if nothing happens this weekend, people will be nervous about it in the next week. Bakovar said the Russian tensions complicate the central bank's outlook, and an invasion would add to already hot global inflation. It's causing problems for the Fed because this basically would inflate oil prices, food prices, wheat, fertilizer, and everything else that just make the Fed's inflation fighting capability that much more difficult to maneuver, he said. The Fed can't back off. You can't blame geopolitics as a reason not to hike rates. That line, we're almost done. He said if the central bank were concerned about the economic impact, it could slow hikes. The problem is they should have raised these rates a long time ago. Sorry, I just ate a bunch of pretzels. I don't know why. The Fed should have raised these rates years ago. The whole point of them having interest rates is not to keep them at zero or negative zero in some cases. I mean, in Europe, there, people are actually paying banks negative interest rates. So you're paying the bank to hold your money. Absolutely crazy. Um, and the situation with Russia and Ukraine, NATO, the U.S. is in NATO. It's very tense times, and there's a lot of political maneuvering, and it's got to be done properly. Because, for example, when the U.S. Invaded Iraq, Afghanistan, Russia wasn't necessarily happy about it, but it had to proceed accordingly. So the U.S. It's kind of like, so now it's Russia's turn, where they're depending on who you are and what your opinion is, you may feel they aren't overstepping their bounds. But anyway, with all that said, scary times, guys. So what does this is a key line of all of this, though. It's causing problems for the Fed because this basically would inflate oil prices, food prices, wheat, fertilizers, and everything else that makes the Fed inflation fighting capability that much more difficult. That's the key line right there, guys. They're losing control of inflation in the U.S. Now, it's happening for different reasons, but they're losing control, and that's where our cryptocurrency comes into play. Why? Because it's an alternative source. But the problem with cryptocurrency is, boom, what is the first thing you do when you're running scared from the stock market traditionally? Anything that's high risk, you sell. You want to go with safe. Well, guess what cryptocurrency is considered? It's considered a high risk investment because it is. Now, some projects are much more stable than others, but it's still a high risk investment. So you have a lot of people running scared. Now, when these guys run scared, people like me say, "Oh, I see opportunity." But that's my take. I'm not a financial advisor, okay? But I'm also kind of deep into the game, so it could be a significant pullback, and I'm still going to be above water. But that's me. So now we're going to jump over here. Now we're going to do some technical analysis. You probably don't even care about the news or why things are happening. Like, what's going to happen with my money, right? All right. Well, this is what's going to happen. Crystal ball, what's going to happen? You know what I'm saying? I don't know what's going to happen, but this is what the charts are telling me. All right. So this was a key resistance line that it was sitting at right now. This is the overall crypto market cap, by the way. This is all cryptocurrency. It was sitting at 2.02. It's just made a significant drop down to 1.86, and I drew a strong resistance point. This is a weak resistance point. Doesn't even deserve a line. I could put one there, but it's so weak, so weak. Let me stretch it out. Very weak point of resistance right here. This here is a very strong point of resistance, but that's all the way down to 1.64. And that recent drop we had dropped down to 1.49. Let's pray to God it doesn't get that low. Let's pray that this holds here, but just be prepared. Now, if we go to Bitcoin, this chart's a little bit more complicated when you look at it, but it's really not. It really isn't. What it's saying, let's start at the bottom and work our way up. What it's saying right now is the MACD is telling me that we are in a serious bearish trend. No crap, right? And then the next one up says, the RSI says to me, okay, it is, the buying pressure is next to none and it's entering into an oversold category. All right. So right here, like this was extremely oversold here. And look at that dip. Matter of fact, let's do that. So it'll make sense. So you see right here, extremely oversold. You run it all the way down, then it comes back up. Now it's on the higher end of things. Then you can see right here where it just jumped up recently. But that's the idea of it. All right, guys. So what you have here is this right here at the top is the resistance line. This is where it recently got to its highest point, which is a little bit higher than I have it, around 45,887 roughly. And then that's where it hit point of resistance, stopped going up. Since then, it's done a pretty significant pullback, as you can see. And when I drew this just a couple hours ago, was not long, guys, this resistance line was holding out. As you can see, it's broke this weak support. And you see how I named it weak support because I really didn't have much faith in this, and it's down past it. Now, this next support line, I'm praying to God it holds at 41,545, but it could drop right through that. Now, if it drops through that, I didn't even draw it because I know that it will freak some of you out, but the next point of resistance is like all the way down at 38,000. I'm hoping that doesn't happen, but prepare yourself mentally because it's looking like it's going to happen. All right. So you want to make sure you're, because sometimes it's better to sell, but other people are like little guppies out there, like me. I'm just waiting for you to panic sell so I can come up and, you know what I mean? So something to think about, and that's Bitcoin. Now we're going to go over to Bitcoin on a cipher chart, and as you guys know, I've been doing these lately. You guys that my market cipher chart is a knockoff. So it's almost like I went to a flea market and picked it up. But it was free. It's almost good. It's almost good. I will admit though, by the way, my Kangos are real. All right. I ain't get that at the flea market. It used to though. Anyway, guys, back to this. As you notice, I'm not panicking because this is how it is in the crypto world. It's high risk. Just I hodl. I try not to panic no more. Also, I don't want any panicking over the years. But all right, let's go back into this. All right, so you can see earlier, I was talking about the whole reversal of a previous trend here, and went bullish to that real red dot, and then a lot of bullish continuations, one bearish continuation, bullish, bearish continuation, bullish, and a couple bearish continuations. But then I hit this here where it says a bearish continuation and then potential short spot where you can short the market. I don't like longing and shorting that much. I always lose. Doesn't work out for me. I don't stick to the plan. But that it's saying it was right here was a good point for it, and obviously it was because it came off at, let's see, where did it say, at 42,000. Whoa. came up at what 44,690, and now it's down to what 42,900. I mean 96,000. Well, you see it, 42,496. But anyway, so that was a great opportunity for somebody to short the market there, honestly. But I don't really do that. But I am liking this market cipher, and the market cipher is showing it also a bearish tendencies on the second chart down here. So it's going to pull back significantly more. I'm just waiting for a trend reversal to pop up, and then it's like, oh boy, like right here. But just mentally prepare yourself, all right? Let's talk Hex. Let's talk about Hex, all right? I was about to sing an old Salt and Pepper song, but most of y'all, I'm just old. I'm just old. All right. The ones out, you guys out there old enough, you know that song. Um, let's talk about Hex, baby. Remember that joint? All right, here we go. All right, let's look at this chart here. You got the 20-day moving average up here. Now, I remember earlier I said I was a little worried about the way it was behaving, the 20-day moving average, because it's kind of this slowly drifting downward. Now, the 50 days, this green. Why did this move? I'm sorry. The 50-day is this green one right here. I have a arrow pointed over to it. This is the 50-day moving average. And then I have an arrow pointed over at the 200-day moving average. Now, I do like the fact that the 50-day is crossing the 200-day moving average, but this downward angle on a 20-day moving average has me very nervous. And with the market doing its current pullback, I'm not really sure what to expect, but I would have to say things are tending bearish, if anything else. Now you have the 100-day moving average. It's just kind of lagging behind, doing its own thing back here. Normally, I would be excited to see this crossing over, but because this is slowly etching its way down, it has me a bit nervous, guys. So we're going to have to wait and see what happens there. The RSI for HEX is saying that it is neutral, it's not oversold or overbought, and the MACD is definitely saying that it's in bearish territory, very much so. Now, I drew some support lines. Well, let me close this up so you can see it. I drew some support line. Right here is a weak support line. Oh my gosh, I drew this earlier. I drew this like 2 hours ago, literally, like with the other chart. And the weak support line is holding this second, okay? Now, this weak support line is that 20-cent support line that we were talking about lately that we hope it doesn't break it again. But the next level support after that is actually going to be down here around, and this support line is 20 cent 23, you know what I mean, 0.23 cents. The next support line would be 0.193, which is a penny less. And then the next support down from there, which is this is a weak support and this is a weak support. The strong support is right here, and that will be at 0.1869. I know a lot of you guys remember that one because we kind of just stayed in it for a while. It was very frustrating, but that's where we're at, guys. We're sitting on the first support. We're going to have to see what happens. I'm really hoping it holds at 20 cents, but I got a suspicion it's going to drop down to at least the 19.3, if not the 18.6. I'm really thinking it's going to fall back to 18.6, if not lower. Hopefully not, though. This is the same chart I always show. It's in a downtrend still. The support line, let's see where the support line is drawn. The strongest of all the support lines is drawn at 17 cents. I don't think it's going to break that. I think it'll at least hold out on it, but anything can happen, guys. So be prepared for the pullback as far as 17 cents, if not 15 cents. You guys know the routine from there. All right. Bollinger Bands actually is... Okay. The Bollinger Band actually... Okay. It was neutral territory. It jumped up into the more bullish action with purchasing, but now it's got a little drop right there. So now it's dropping down to a bearish, which look at the volume, it's all bearish. So, but it was just interesting how fast that changed over. All right. Now we take a look with my knockoff cipher chart here. Hey, that wasn't there earlier for HEX, was it? I don't think it was. So it still actually has HEX. Let me check the date on this, guys. No, that was yesterday. Okay. All right. So HEX, you can see where the previous trend reversal here. Green for bullish, obviously. Then a lot of bullish continuations one or like three bearish, maybe four bearish continuations. Now right here, it said that it was good for a short, and I think we're still in the middle of that where it gave a notice that we're good for a short. So, and there's a trend reversal there. I'm just not sure which way this trend reversal is going to go, but it looks like it's going downward with that short there. So it's definitely something worth watching. Yeah, I'm going to say it's going to drop down to at least 19 cents. No lower than 15 cents, though. That's what I'm saying. Remember, I'm just a guy out there on the internet with a love for cryptocurrency. You have to do your own research, guys. Now, right here, this also tells me that it's definitely bearish sentiment in the market. Let's see what happens. All right, and this is irrelevant today, but until HEX crosses over that 26-cent marker, according to Fibonacci, I am going to consider it bearish. So, what do I have to say after reading all that? Well, I say I'm holding the line. I'm not doing nothing. One thing that I would suggest you guys to do, there's a debate if you should stake your HEX or just hold on to it as you wait for Pulse Chain. I decided about 2 months ago, all right, I'm done. I'm done waiting. I'm staking. That was a multiple $1,000 decision. So everybody's different. But I'm just going to continue to stake. Now, what I am doing is I'm staking for shorter period of times. But I think that's a much safer and stronger play than just sitting on your money, having to do nothing. And you got to remember, when Pulse Chain goes live, your stake carries over to it. So it's like no big deal. You actually have two stakes. You have a stake on the Ethereum and a stake on Pulse Chain. Nobody talks about that. This crap is going to be huge, guys. But anyway, yeah. If you haven't seen my video earlier that I posted, you really got to check it out. It was awesome. You'll like it. I'm not even going to tell you about it. Just check it out. Other than that, guys, just stay calm. Don't stress. Life goes on. The markets go on. If you have only invest in stuff you believe in, you have a passion for, and everything will work out just fine. For me, it's HEX, Cardano, Polkadot, the Decentraland. Those are my favorite projects. What can I say? All right, but that's it for now, guys. Please remember to subscribe, hit the like button. Until next time, stay happy, stay blessed, and most of all, stay a true Hexican. All right, peace out.